Welcome back, ladies and gentlemen. This is Crypto Arc, and today we're gonna have a different video. Let's talk about trading, right? This is a tutorial about how to trade futures on Binance on this bear market. Okay? This is a different strategy than the video that I have shown before. I have explained about futures, how it works, the contracts, and all of that. Now, today we're gonna talk about my personal strategy on the bear market, right? Two things that you remember from the last video. If you go to futures on Binance, you have two sort of futures. You have the USD margin and the coin margin, right? Each of them, they are very, very different in purpose. The good thing is you can have open trades on the USD-M and it doesn't affect the COIN-M. So you can have multiple trades on the same coin. Right? You can trade, for example, XRP in the COIN-M on the Perpetual, on the Quarterly at 9:30 and 12:30. Right? On the USD, you can trade XRP. As you see here, you can trade XRP on Perpetual, right? Or you can trade XRP as well on the BUSD pair, right? So roughly 5 positions that you can have directly on XRP, for example. Cool. My strategy on the bear market. Bear markets, you have hit the bottom, right? So remember, in the bear markets, let's talk about Bitcoin. In the bear markets, what have happened is this, right? This has happened. So the price is already too low. It's extremely low compared to what it was before. Meaning, you can be sure price is going up. Look at this difference, right? Right here, from the lows, 17K, to the highs, 69K. So what I do? Well, obviously, my focus now is COIN-M. So you basically get your portfolio, right? Here in this account, I just put roughly $20K, $20,000 just for the sake of the purpose of this video, right? So I'm explaining to you, this is not my whole portfolio, this is not my main account, this is one account that I'm using to make the videos, okay? So I put here $20,000 and split into my top coins, right? BTC, ETH, XRP, and ADA. How do I trade now? Knowing that, right? Knowing the market is going up, just by having the coins, holding the coins, that will give me money, right? That will give me more value. My P&L is going up. But that's not all. I'm going to trade with the coin itself. If the coin goes up, my value also goes up. What is the strategy here, right? You start by the longest quarterly, right? So always start by the 12th. Why? Because it gives you time, gives you buffer to make mistakes, to correct the trade, right? So you can, for example, let's say I open a trade on Bitcoin and I'm gonna put the trade here. Let's just put any amount, like 5 contracts. You just put the trade here and let's suppose the market just dumped, right? So from 20K, the market goes to, I don't know, 18 or 16K. Well, you still have time to recover that trade. And on the back of your hand, you still have the quarterly of 930 and you still have the quarterly, the perpetual. So the perpetual is in fact my biggest weapon, right? And the strongest weapon that you can have. But in the perpetual, you don't use it, you don't start with the perpetual because the perpetual you can hold forever, right? So it's your last chance to make it right. On the perpetual, of course, there are fees, right? On every 8 hours, as you can see here in the top of the screen, you have fees, right? So the fees, the funding fees are 0.1% now. How do we get rid of the fees, right? What is the strategy? The strategy to reduce the fees is playing with the leverage, okay? Why playing with the leverage? Because you're going to have less contracts, right? And so your amount will be less, meaning your fees will be less. If you use low leverage, very low leverage, of course, the maximum is high, right? Look at this. The 3x leverage, you can put 1,000 Bitcoins in a trade, right? But you're going to pay the funding fees for those Bitcoins that you put in. When you go higher leverage, you can only use less Bitcoins, so 400. With leverage 10x, only 100 Bitcoins, right? 11, only 50, and so on. When you go to 125x, you can only play with 5 Bitcoins, right? Because that is extremely dangerous. I don't advise, I don't do that. I do high leverage on USD margin, right? So on USD, we have a different strategy. I'm going to talk in a different video. Today is focus on the coin. Bear market, you keep the coins, you keep accumulating the coins, right? So here is the trade, right, that I just put in, the limit trade that I just put in early in the video. Notice what this trade has here, right? My liquidation price is 800, right? So I will be liquidated with my, how much do I have here? A half Bitcoin, right? If the price goes to 800. So I have plenty of time. I have a lot of buffer to make it work, to make it right? If the price goes against me, goes down, what I do, I open a different trade. I go to BTC 930, quarterly 930, right? And I can correct it. I can short it. I can long it. And then later on, I can close partially, right? Close partially my position here to save my trade. For example, if I hit close position, this comes up, and then you can close percentage of your position, right? That's one way. But keep in mind, when you do this, you're executing a market order, right? Meaning you're going to pay more fees. See here, type is market. You can, of course, change it to limit, right? Limit, you are going to have half of the fees, is half. So let's say I'm going to put here around 22K, right? 50%. So you can see right here, right away, that I'm going to lose 0.0001 Bitcoin if that happens, right? But you see up here, the entry price and the market price next to the top of this drawer of this little model. The price right now is 22,340. So what happens? Well, that's the beauty of this closed position, right? If you put a limit, if you put it there and you confirm, it's going to execute, right? But it's going to execute now because you're trying to close, right? So your price limit is below the price. Okay, so in that case, your order got executed as a market, right? So be mindful of that, right? This closed position I only use for market orders, right? Market executions. I don't use it for creating limits. So what I do? Well, there is hopefully in Binance there is a much better tool that we can use. Is the stop and profit loss. You see, is the second button, right? Stop and profit loss. Let's understand that window, right? What happened here is we have a whole different setup at the top, but in here you can also do the same thing with 100%, 50%, 70%, or you can type a custom number, okay? In here, look at what I'm gonna do, right? This is the type, so I'm gonna put limit, and the limit now it's gonna be much lower. Right? In that case, the system will automatically understand, right, the trigger price that I have to put something like 900. Yeah. So basically, when the price hits 22,000, right, my trigger price will be 21,900. Okay. So this is kind of, to me, a stop loss, right? If you look at your open orders now, you have that as your stop limit, right? This is what they call stop limit, because when the price hits 22,000, I'm going to put a limit on 21,900, right? I can do the opposite as well. I can put, of course, higher. So I can say, if the price goes below 22, I want to put a stop limit a little bit above. So when the price retraces up, I get out, okay? This, I'm going to cancel, is the main tab that I use to organize or to manage my trades, right? Because you have take profit and stop loss. Look at the top, and you have position stop loss, right? What is the difference here? Okay, difference is this is usually what I use for limits, right? So I am in this trade, and I want to put a limit that I'm gonna take profits when the price hits 23K. See, my estimated P&L back there to that point will be 0003. I hit OK. This is when the price, when this limit will trigger, right? So this limit will trigger, of course, at 22,900. And that's it, right? I have my take profit limit now, okay? So when the price hits 22,900, I'm going to put a price at 23K to execute my order, right? By the way, I hope I explained correctly on the previous one, because the condition is where the price has to hit before it starts triggering your limit. All right, back here. What else do I do, right? Well, I can take profits on the market as well. So you don't need to put the limit, right? You just go market. So you don't need to set the limit price. See, when you put market, the market price is set, and this is going to be my market price. So I'm going to take profits on 25K. And by there, I'm going to have, if you look down here, 0014 Bitcoin as estimated P&L, right? The estimated P&L is just an estimation. Of course, things can change. So if I hit confirm here, what happens? My order now is set to take profits on the market, on the type market, 25K. Okay? Cool. With that being said, those are my main tools, right? Now let's talk a little bit about the position take profit stop loss. Okay? This is where you put your major, because in here you can take partials, right? So in here you can take 50%, 70%, or a custom number, right? In here, it's all or nothing, right? You see there's no percentage, right? This is all or nothing. So I'm going to take all the profits on 25K, and also you have here in green your estimated P&L, or I'm going to have a stop loss on 20K, right? And this will be my P&L by there. So I can set just one if I want, right? I do this, and you're going to notice now my trade has the take profit stop loss. I can hit this button here and edit again. See the edit button? So I can hit it and edit, and I can edit basically, right? So that's it. This is my trade. Okay, cool. Let's close this position fully, right? So I'm going to close 100% on the market, confirm. That's it. It's gone.